Hey everyone, I'm Katie Evans with the Living 48 Real Estate Team, and we are grateful to welcome you guys back to our May market update. So there's been a lot that's been happening here in the industry in Arizona, in the real estate industry, and I have got lots of information to share with you. So we've been learning all kinds of new technology throughout all of this, and I'm gonna share my screen with you here so you guys can look with me at exactly what's happening in the real estate industry. And because so much has been happening, I've got lots of notes here to share with you as well. So bear with me. Let's run through the factoids really quick for those of you who just the facts, ma'am, just give me the facts. So let's run through those facts really quick, and I'll even show you a quick like before and after comparison with things that are going on right now. So if you all remember back in, let's see if I can get there, back in April, we had about just barely over 2 months of inventory and 63 days worth of supply, two months worth of supply and 63 days worth of inventory, which was up from March. But rolling into May here, we're up even a little bit more. We're now at 2.6 months worth of supply and 66 days worth of inventory. So just a little bit of increase, not a huge increase, but a little bit of increase, enough to make it noticeable. And then if we look at our days on market back in April, we were down, our active days on market were 82 days and our closed were 56 days. Now, remember, everything that we were looking at in April as far as closings was coming off of March and February. So all of a sudden in March, we had the COVID-19 hit. And so when we come over here, look at that. Days on market are still down. That is crazy for the closed. What does that say to you? That says Arizona real estate that was going under contract anywhere from March to April was still closing, and they were still closing quickly. In fact, more quickly than ever. So we're not sure, were people pushing to get those things closed as soon as possible or what? It will be interesting to track these numbers a little bit as we go forward. So you can see active days on market. Now these again are the actives that are not going under contract. Right now they're averaging about 84 days on market. And if we compare that back to April, it's just a 2-day increase. It's not that much. So, but the number went up, so it's something to look at. All right. If we get over to the money part of it, let's look at our active price per square foot. You can see back in April, that active is going down. Now we have been pushing those, we've been pushing our pricing a lot as of leading up to all of this. And so people are starting to come back into reality. They're starting to worry a little bit about, oh my gosh, I need to sell this house. Maybe I need to get a little more realistic with my sales price. And so we're seeing that sales price, active price per square foot number come down. So in April, it was down over March, 243. And as we went into May, that number was $239.54 a square foot. The sold price per square foot, however, has gone up since April. So April's was up from March at 175, and now it is 175.58. So very small again, but it did go up, and we wanted to point that out to you. Now, your average sold actual sales price versus your median sold actual sales price. And we're looking at these over the last 30 days. I trend these, and so I know what they are going for the last 12 months. This helps us know what appreciation is, all that kind of stuff. But these average sold and median sold prices are going down just a little bit. In fact, if we look at the April numbers, they were going up, and now in May, they've gone down. So again, I want you to see 377 to 369, 303 to 299. They're not huge jumps, but they're jumps. We need to watch them. We need to keep an eye on them. Okay, so those are the factoids. If you guys want me to break those down any more for you, we absolutely can. But I want to dive into some sort of meat and potatoes for you here. Based on the factoids, I want to give you, sorry, I'm using my little cheat sheet here. I want to give you some information on that. So based on the actives, what I want to bring out to you is while we had a slight increase in supply, which is normal, that number is still down 23% year over year. So last year at this same time, while we were already at record lows in inventory, we're still down 23% from where we were last year. So inventory continues to be a challenge, all right? Continues to be a challenge. And that's down 18% from 2018. So again, we're still struggling with this inventory number. I would also like you guys to note that our appreciation over the last little while has actually been kind of crazy. We really don't like to see appreciation over about 8%. For the last 12 months, we're averaging our appreciation at 7.9. So this is a number that we're watching. Over the last 30 days, our appreciation has actually been at about 11%. So you can see we've topped that 8%, but we're looking sort of long game here, and that number is about 7.9. So when appreciation starts happening too fast, too high, then we start worrying about going into a bubble. So we're watching that. We're watching that right now to see what's going to happen. And this actual whole pandemic may be the catalyst that we needed to slow everything down, and that might be important. Another number that you might be interested in, especially if you are a seller, right now our listing success rate across all of the Arizona MLS system is 79%. That means all of the houses that get listed, 79% of them get sold very quickly within their first agent, as a matter of fact. So those are a couple numbers that I wanted to add into our little factoids. So just to fill in the holes for you a little bit more, a little more information, wanted to let you know that for a while, Keller Offers was actually one of the only instant offer or iBuyers that remained in the market. All of the rest of them bailed out. So Open Door, OfferPad was still there. There was a bunch of other ones that came and went. So I'm trying to think who the other ones are. We don't play too much with them, but when we need to, we do. Knock, Zillow, all of those guys. They ran for the hills when all of this went down, and they stopped buying and canceled their offers and all that kind of stuff. So OfferPad sort of remained, but only through working with Keller Offers. And so not very many of the iBuyers remained throughout this. Now, what we have discovered is Open Door is back in the Phoenix market. However, and that is of May 4th of this year, 2020. However, their plan has changed. Things are different. They're not offering the values that they were offering pre-COVID. And the products that they're turning around and flipping and reselling are not great products. So there still is going to be a place in the market for them, but just remember, when the going got tough, they ran away. So just want to bring that to your attention. All right, so we want to talk a little bit about lending and what's going on with lending right now. It has been volatile. It has been all over the place since COVID hit. If you'll remember, back on March 23rd, Wall Street hit our most recent all-time low. And so we have rebounded from that about halfway, about 50%. And what is helping the mortgage industry and lending is it looks like they've mostly stabilized. So they're seeing gradual improvements, but it's not so much of a jumping up, jumping down. Like they were all over the place for the first little while. And so we were having some real challenges with lending and interest rates and all that kind of stuff when this all first went down. So things have stabilized a little bit for lending. That is a good sign. Programs are starting to come back that we lost at the beginning of all this. And so that is a really, really great thing that is happening for us right now. All right, supply and demand. Let's talk about supply and demand for just a minute. Obviously, we have very, very, very low supply right now. And going into COVID, we had very, very high demand. So throughout COVID, what has happened is our supply has dropped because people were ordered to shelter in place. And if they didn't have to move, they weren't going to move. And because of that, also our demand decreased. So what happens when both supply and demand decrease together? Well, the great news is that actually means that your value gets left alone. When demand increases and supply stays below it, it becomes a seller's market and our values increase. When supply is really high but demand is really low, it's a buyer's market, and that's when our prices have to come down. However, when they both move together, our values maintain. So that's the really good news. Now, the challenge that we've got coming out of COVID-19 is we've seen a lot of furloughs, a lot of unemployment, a lot of people struggling financially. So, of course, what's one thing that affects whether or not people are going to buy? It's employment. Employment and income are going to be a factor going forward coming out of COVID for our buyers. Lending practices. Lending has tightened up quite a bit. They are asking for more documentation, higher credit scores. There's more overlays now. So people that were being able to qualify pre-COVID are now struggling to get qualified post-COVID. So we'll probably see some of those lighten up. We've already started to see them lighten up just a little bit. But we're going to continue to watch that. Banks need to make sure that they're making sound investments for themselves as well, and so that's going to continue to be a factor for a little while as well. Consumer sentiment is also going to be something that we're going to be talking about as we come out of COVID-19. How are people feeling about things? Now, I can throw numbers at you all day long, but at the end of the day, how are you feeling? Are you feeling confident in your job? Are you feeling confident in what's going to happen with the economy and with the housing market and all those kinds of things? So customer sentiment is going to be a big deal. As far as supply concerns, illness, death, are we going to get more inventory because of that? Are we going to get less inventory because of that? That's going to be a thing. Job losses, people who lose their jobs and find themselves in financial hardship and then find themselves needing to sell their house. I'm actually doing a whole, another video that will be emailed out to you all if you're on our email list concerning that very, very thing and making smart decisions around forbearance, around needing to sell your home. Are short sales and foreclosures going to be coming back? So if you have any questions on that, the short answer is no. Do not do anything silly. You guys, most of us have equity in our homes right now, and there is no reason. With equity means we have options. This is very, very different from back in the Great Recession that was caused by lending practices and housing. And we have different options that we have before. So do not be thinking that we're going to have a great rush of short sales and foreclosures coming back into the market. Let's talk about that if that's something that you're concerned about. Forbearance is also something that we need to take very, very seriously before you decide that that is the option for you. So please have a discussion with either myself or with one of our lenders to help you make those decisions. Job losses, again, will continue to be a concern, and then again, consumer sentiment. So affordability numbers are still within the range of normal, what we expect, and so that's kind of all of the important things that I think I wanted to share with you today. New contracts, just as again another number to show the strength of our real estate market. Weekly, our new contract number is up 31.9%, almost 32%, and that is since April 5th of this year. So 3 weeks worth of increases in that weekly contract, new contracts. Closings are down, but that's because you can't sell what was never available to buy. So when we shut down, it shut down as well. So, but again, 3 weeks already of increased new contracts being written and accepted. So that is great. Our under contract numbers have stabilized, but again, still lower than what we're normally seasonally used to. All that to wrap this up and just kind of let you know, it is still a seller's market. It is still a hot market in Arizona. Whereas before we were going like super absurd hot market, we're now just down to a hot market where we were seeing maybe 10 to 12 multiple offers. We're seeing like 3 or 4 multiple offers now. So again, I don't want anybody to be fooled into thinking, oh, well, we're switching, we're going to a balanced market, we're going to a buyer's market. We're not. Things have slowed down just a little bit. They've cooled off just a hair, but not enough to say that we are changing the way that we need to be looking at business right now. So here's just a quick summarization, quick little situation report, if you will. 3rd week in a row of increased new contracts accepted. That's fantastic. That's up 32% since about April 5th. However, down about 19.7% since February 23rd. To be expected from what we've just experienced. We are not seeing list price reductions happening, but what we are seeing is we are seeing more seller concessions rising. So list prices are staying the same, but as a seller, you can expect perhaps that you're going to be giving seller concessions now, whereas before you were not. So what I want to leave you with, if I have one most important message to leave you with, a lot of us have family or friends that are advising us when we come to these really, really big purchases. And we've all experienced a little PTSD coming out of the Great Recession. Now we've had this new pandemic hit, and there's a little bit of PTSD happening here, and I don't mean to minimize it, but it is real. I don't want you to allow other people's fear to affect you making good decisions for yourself and your family in regards to buying or selling real estate in the Arizona real estate market. So we are here to be a resource for you. As you can tell, we study the numbers. We look at what's actually happening. We're looking at the facts. We're not looking at feelings. We're looking at the facts. And so I want you to choose to consult with those who are professionals in the industries that you are considering. So real estate, lending, those kinds of people. Don't let your parents, don't let your friends, don't let your neighbors, and even yourself participate in that housing PTSD that we are absolutely seeing right now. Let's discuss your specific situation and determine whether or not now is a good time for you to make a move in the Arizona real estate market. So, as always, we are here to be a resource for you. I hope this monthly market update has been helpful to you. Thank you so much for watching it to the end. We will catch you next month with another market update. And in the meantime, we are always here to be a resource for you. Please check us out at www.living48realestate.com. That's our website. You can search properties there. You can get your instant home valuation there, and there are a ton of other resources for you there as well. So as always, life is for living. Now more than ever, that living starts in your home. So thank you so much again for watching, and we'll catch you on our next market update. You guys all have a great rest of your week.